Welcome back. Well, the markets continue to hold well in the green. It appears we're moving towards the 17,800 odd mark, but the big Q today is going to be the CPI data. That'll be the global Q. And from the domestic Qs, we'll be waiting by for the IT companies that kickstart their earnings. For the time being, though, let's focus on the finance space as well as the banking space. Ujjivan Small Finance Bank, well, it's the next corporate on our radar. We're speaking to them post their Q4 update. The company has seen a robust dispersals, which aided the loan growth as well this time around. Further, there's also a reduction in stress, which has seen the gross NPAs come down to around 3.6% from over 5%. To discuss this and more, we're joined by Mr. Itira Davis, the Managing Director and Chief Executive Officer of the company. Hi, Mr. Davis. Good morning. Thanks so much for joining in. Well, give us some sense about this growth first. Has it come because of an increase in clients, or is it that the ticket size has moved up? Give us a broad understanding.
Good morning, Nigel. It's good to be back here with CNBC. A good question about how the growth has taken place. For us, the growth is very broad-based. We have seen after the initial couple of quarters during the year, which was mainly based upon existing customers with new loans to them, we broadened the base by going into new customers. Because the economy also picked up and showed us signs that that risk was worthwhile taking, and we moved in that direction. So our 33% growth in the OSP for this year has come from a combination of existing customers as well as a good number of new customers. The ticket size has remained more or less the same, because initially the ticket size went up a little when we were dealing with existing customers. But as new customers came in, the ticket size fell a little bit and is back to what we have normally during the pre-COVID levels.
Okay. So what kind of overall, I mean, the disbursals are very strong this time. Even in the quarter gone by, the AUM growth has been about 33%. On an average, what do you think you can do in the full year? And, you know, also for FY24 is what I'm asking. What kind of sustainable growth do you see?
Yeah, the growth in OSP will continue in the new year, and that is the objective. Whether it will touch the 33% that we have seen will be determined based on how things pan out in the first quarter. You know, we are looking very carefully at interest rates. Right now, there's a pause in the interest rate movement. If that continues and it stays at these levels, then, you know, we can look at some interesting numbers for growth. But if the interest increases, RBI does another one or two increases in interest rate, then the market is going to be a little bit more challenging, and the numbers will also have to play out on that basis. So growth is there for us. We have forecast a good growth, but all of it will depend upon interest rates and how they move.
Just one follow-up. You said the market could get a bit more challenging if the rates move up further. But have you seen any impact already? I'm asking because you cater to a lot of segments, you know, the MSE segment, microfinancing, and these are pockets that have been under pressure now because of rising interest rates as well as inflation hitting pockets. Any impact that you've seen so far, either in terms of growth or even on asset quality?
No, loan demand remains good, so that is not a problem at this point in time. But you know, if a couple more interest rate hikes, we have only had 2 interest rate hikes on the lending side for the whole period from last May, when the interest rate started moving up, or when RBI started raising rates. We have had only 2 movements on that front. Whereas on the deposit side, there's been several more movements, and as you well know, during March, there was a big scramble for deposits, and we saw several banks pushing interest rates up. And that has sort of slowed down since RBI did not raise interest rates at the beginning of this month. But if that scenario continues to play out and we see a couple more interest rate hikes, the deposit mobilization will be a challenge. And then that will have to be passed on to the customer. So then how does the customer react to higher rates on the loan side is something that we need to see. But for the moment, Ujjivan is very comfortable. We are very liquid. We ended the year beautifully with high liquidity. We, in fact, anticipated this interest rate cycle. Because of my gray hair, you know, I have seen these cycles a few times, and we anticipated and took those decisions early enough, first in August and then in November, So we were well placed in terms of mobilizing deposits, and we didn't have to join the scramble in March. So I think for the moment it looks good. First quarter is looking good as well, but let's see how it all plays out.
All right, Mr. Davis, but with the current scenario, I mean, assume that the RBI has paused and maybe there's one more rate hike that they could look at. What kind of a number are you looking at? Loan growth and NIMs, as well as if you could give us some color on your restructured book for the coming year, that's FY24.
Yeah, I mean, at this stage, I would rather wait for our final numbers to be announced next month in May, and then talk about the book and the growth. But let me just assure the market that it's going to be in the range of 20 to 30% growth in terms of the balance sheet. Now, whether it comes towards 20 or 30 will depend upon how interest rates play out during this year, during the first and second quarter. And then, I can give you a firmer number as to how we're going to zero in on which side of that 2030.
We'll take that broad range for now. And as you said, when your numbers come out, we'll have a chat and you'll give us, more concrete numbers. But what about NIMs? I think you're at around 9.5% or thereabouts as per last reported. Where is that?
Yeah, NIMs for 22-23 was very good. It would have ended around 9.5. For this year, again, there will be some challenges on the NIMs, but I don't see it falling below 9.3% is my best estimate at this stage.
Okay. What about new products on offering? Anything in the gold loan space that you'll be looking at? There is a lot of competition here as well. Would you be looking to take competition from NBFCs? Any thoughts?
Yeah, the gold loan is an area which we have test marketed. We are now ready to go into it, with a larger business. I think, we are looking initially at our own customer base, because right now, since we don't offer it, many of our micro banking customers are going to other people and other banks and getting those loans. We try to get them back, and we'll offer that product to them. So that will be the start, and as we then build up, we will be looking at new customers. So I think our reach across the country will help us on that regard. We have now about 629 branches, and we'll be adding another 100 branches during this financial year.
All right, 100 branches. And what is your base currently, sir, in terms of branches?
Sorry, I couldn't get that.
As of now, what is your branch base? And you're looking to add 100. I missed the first number.
629 branches.
And you looking to add 100. All right. Final question before we let you go. We need to clear some rumors as well. Is there any possibility of Ujjivan Small Finance Bank getting merged with any other entity?
Well, there's nothing that I'm aware of, and nothing being discussed at the moment. We are focusing on the reverse merger. That is, to that extent, there is a merger, but it's the holding company being merged into the bank. So
that we're aware of. That we're aware of, but anything else we should look forward to? I think at this moment was the crucial words that I picked out of that statement. Do you think there could be something in the offing post that?
Well, after the the reverse merger is completed, we are open to look at all options on how we grow, how the growth takes place, and how we go forward. So yes, it's one of the possibilities after the reverse merger is completed.
Okay, but anything in this calendar year itself that we could look forward to?
Not in this calendar year. A bit early for that.
Okay, all right, got it. Thanks a lot, Mr. Davis, for joining in. Pleasure speaking with you on CNBC TV 18. That's the word coming in from Ujjivan Small Finance Bank. The market is still very quiet, so not too much happening. The good part is that the Nifty is holding on to its gains from the last 7 days, piling on a bit of gains now, 40 points higher, but nothing exceptional really in the market, just sort of chugging along on the upside. Let's then take a breather from tracking the markets minute by minute and get you some expectations from what to look forward to in the pharmaceutical space this quarter. Ekta is here for more. Ekta, over to you.
Thanks for that. Well, yes, pharma companies are expected to report around a 14% revenue growth, with margins estimated to be stable to marginally improving in the band of 22 to 24% on a consensus basis. The key growth driver this quarter is expected to be the US business, which is going to be aided by key launches such as the cancer drug Revlimid generic and some stability in price erosion and additional supply opportunities as some companies have looked to exit key drugs. Q4 is usually weak for India but could be supported by a strong flu season. Estimates are India is likely to grow anywhere between 9 to 12%. Factors such as the impact of price cuts from the NLEM revision will be watched closely. Margins of around 22 to 23% supported by improved raw material and logistic cost pressures and Q-on-Q stability in drug pricing is something that we could expect. Stock-wise, Dr. Reddy's, Natco, Cipla, Zydus Life are all key beneficiaries of Revlimid generic. Sun Pharma is likely to see continued traction from sales in the specialty business. Watch for the impact from the IT security incident, Halol import alert. Commentary from Lupin on Spiriva generic and Aurobindo on the injectables business will be watched closely. Biocon should be aided by full integration of the Viatris biosimilar acquisition. Domestic growth is expected to be steady for the likes of Torrent, JB Chemicals, Alchem, Glenmark. API companies are likely to see improved demand, aiding revenue. Realizations could continue to be pressured due to excess capacity. Margins, like pharma companies, will be aided by the overall decline in raw material as well as freight costs. From the API companies, a Q-on-Q recovery in Divi's Labs, margins will be closely watched on a sequential basis. Diagnostic companies should see mid-single-digit revenue growth Q-on-Q, with margins sustaining anywhere between 24 to 26% for Dr. Lal's and Metropolis. Hospitals could possibly report stable to better occupancy sequentially due to factors such as stable surgical revenue and increase in medical tourism. And specifically in the hospital space, for Apollo Hospital, the progress on Apollo 24/7 will be watched quite closely.
All right, thanks a lot, Ekta, for that. So let's hope a stable performance comes through for the pharma sector. But the stocks have not been doing too badly. In fact, Dr. Reddy's has been one of the big gainers this year. It's up almost about 15-odd%. Vishal Manchanda, who's the pharma analyst at Systematics Group, joins us now to tell us what to expect. Vishal, Ekta put it, across to us about the entire sector. So out of all these pockets that we're looking at, the API space, the diagnostic companies, what stands out for you as one of the big performers this quarter?
So I think among the formulation names, the larger names, I think Zydus Life is one which should do the best in terms of earnings performance on a quarter-over-quarter basis. So they have the best in terms of the incremental launches in the US. Zydus is best poised. While I think all other Sun Pharma has got some supply issues they need to deal with. Dr. Reddy's largely depends on how Revlimid does for them on a QOQ basis, because what we have seen is there has been market share erosion for Revlimid in the US. And we are so specifically in case of Revlimid, there is the market share and sales do not correlate very well. So we are not very sure how Revlimid behaves for them, but there is a possibility Revlimid might show a dip in case of Dr. Reddy's. But let's see how it pans out. But otherwise, Dr. Reddy's ex-Revlimid business is doing well for them in the US. We also need to watch out for how the NLEM headwinds play out, because there has been ceiling price revision this quarter. We had seen notifications from NPPA on reducing ceiling prices of drugs. So those ceiling price revisions impact is something we'll have to see how it impacts the numbers. It should be 100 or 200 basis point. That's what we are expecting.
All right. Hi, Vishal. I heard your review on that, but I want to particularly ask you about Divi's Laboratory. In the last few quarters, the street is very, very cautious because the management, in terms of margins, they're not really giving a concrete number. They're saying for the few quarters, it could be soft. Today, the stock is up the Divi's Laboratory stock is up closer to around 5%, Vishal. Any reasoning for that? I mean, have you picked up something?
I can't get you. I'm sorry for that.
Vishal, are we audible right now? All right. I think we have. Okay. I think we'll get that fixed. But Divi's Laboratory, that's the big gainer today. It's up close to around 4.5%. For the last few quarters, the street has been a little bit cautious because of margins. They've seen a fair bit of contraction, and there's no visibility, at least as of now, concrete guidance that's been given about when does it recover. But just take a look at it. Last 1 month, it's come back in style. It's up close to around 10%. And half of that actually has come in today's trading session itself. But from the peak, it's seen a fair bit of correction. Vishal's back with us. Vishal, I hope I'm audible right now. because I wanted to ask you about Divi's Laboratory. That's seen a sharp correction from the peak, but today the stock is up 5%. Any fresh piece of news that you've picked up?
So I don't really think there's a news on Divi's, but for sure the previous quarter that we have seen for Divi's was the bottom, and we're going to see growth from that number. So probably we'll see some margin improvement, and we'll also see sales improvement in case of Divi's, because the COVID supplies had completely tapered off, and now they can grow on the base. So it's going to be a positive trajectory for them from here on.
You want to give us a couple of numbers about what kind of margin improvement are you factoring in, for Divi's, or what kind of growth estimates you have?
So I would like to put it on a quarter-over-quarter basis. We are expecting around 3 to 4% growth on a QOQ basis on top line, and about 100 basis point improvement in margins.
Okay, 100 basis points improvement in margins. Ekta was just telling us that there is a sequential mid-single-digit revenue growth that she's expecting with a margin expansion this time around. We'll keep Divi's on our radar. But, the other stock I wanted to chat with you about was Dr. Reddy's. It's had a really smooth run this year. I mean, if you look at the movement, Dr. Reddy's is up almost 15% in 2023 already. And looks like it's going to be a decent set of earnings as well. An EBITDA growth of around 30%, revenue growth of 11%. But what are the big triggers for Dr. Reddy's, you think?
I think what the street is waiting for in Dr. Reddy's for a larger upside from where it is today is people are waiting for them to get more large approvals in the US. So Revlimid is one they got a year back, but people want to see what is there beyond Revlimid. And that's where I think the larger re-rating stands. And the other trigger would be they kind of gaining traction in China market. So those two triggers would potentially be the re-rating triggers for the company.
Okay. And one last word on the diagnostic companies. There was, of course, a lot of pricing pressure that these companies were facing. What is the expectation in this quarter? Do you think that margin pressure is something that can extend into Q4 as well? And what's the call on these stocks now?
So we don't have a coverage on the diagnostic and health, the hospital space, but these remain, the diagnostic and hospital space are structurally well poised for growth. There are hiccups because of the pressures we are seeing on account of the digital players getting aggressive here. But I think pricing is now getting better versus the price cuts that we had seen by digital players is getting reversed. So I think the sector should improve from where it is. Plus the COVID base has been reset now. We don't have that base giving a pain.
Okay. Thanks a lot, Vishal, for joining in, and have a great day. That's the expectation from the pharmaceutical space. Well, for the market, it's looking pretty good, actually. 30 points higher now on the index. The Sensex is up about 60 points. So we'll try and understand whether this market can build on to its gains on the other side of the break. Stay tuned. Mitesh Thakkar will be with us in a bit. Okay, we're holding on to our gains. Mitesh Thakkar is joining in now to tell us what the moves could look like. By the way, we have some good numbers coming in from Puravankara. Wow. The Q4 numbers, look at that, 20% higher on a year-on-year basis. I mean, the entire real estate pack has been on fire. Sales have looked pretty good in Q4. Volume growth is not as much, but realizations have picked up quite a bit. So keep that on your radar. Mitesh is with us. Mitesh, before anything, there's a big move happening in pharma today. Divi's, Biocon, Lupin, even something like a Laurus Labs, all looking very good. Anything in that space that you'd buy? And if not, what else are you looking at?
Yeah. So I would agree with that. In fact, the Nifty Pharma Index looks like heading towards its 200 average, which is another 130 points higher, 12,575. But I think eventually it should cross that and head towards 12,800 plus levels. So I think the pharma space from a trading point of view is very interesting. My top pick is Dr. Reddy's. It's run up a bit, so maybe you would want to buy it and cool off. But that apart, I think Biocon is something which is just giving a fresh breakout. This can be bought with a stop around 218, with a target of around 243, 244 on the upside. And in that apart, I think, Divi's Lab also, the candlestick is very, very positive. They should see follow through on the upside. Targets of around 3200, 3240 can be tested here. And I would want to buy it 50% now and maybe on a 30-40 point dip, add another 50% with a stop below 29.90. On my stock calls, Reliance, I think, could come into play today. It's made a high, slightly tapered off from the highs, but it's been doing about this consolidation for about 6-7 days now. Should break on the upside. So buy this one with a stop below 23.25. Look for targets of around 24.10, 24.20 on the upside. And the other one which I like is Dalmia Bharat Cements. That's a buy with a stop at about 2000 for targets of 2090.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's turn our attention away from the equity markets to the commodity markets. Manisha Gupta standing by to tell us about that one commodity she's tracking today. Hey, Manisha, morning.
Morning, Nigel. Thank you for that. Well, I'm looking at the aluminum prices, which are trading at a 2-week lows right now. Yesterday as well, we saw prices decline more than 0.5%. And even as aluminum has been an underperformer in the sector, we have seen several buy calls come in for this one. And there are expectations that the China stimulus measures, as and when they come, would be supportive for prices. But at this point in time, we haven't seen that. What we actually are looking at is higher production in China, up by 7.5% in the months of Jan and Feb. Actually, this is the highest output for 2 months since 2015. And that's about Jan and Feb. When you look at the month of March as well, we have seen output increase for aluminum and alumina, both of those metals there. So for aluminum, it's at 8.3% in sense of production. Alumina production in China gained up by 8.6% for the month of March. And this is over and above the fact that for 2022, Chinese aluminum output hit a record high of 40.21 million tons. That is where the pressure is coming in from. And then when you look at the prices itself, we've seen 3% decline in last 1 week, when we're down 1.5% in the last 1 month as well. And on year-on-year basis, we are in the negative 30% when it comes to aluminum prices. Another interesting fact to watch out for aluminum is that US, remember, is not buying Russian aluminum. We have seen tariffs increase onto that one. And even as European and Asian consumers are buying Russian aluminum, but they are delivering it on LME, they do not want to use it, is the statement that we've seen come in from various corporates there. So when you look at the overall number, this is what we have in sense of aluminum stocks on LME, which have come in from Russia. In Jan, it was 41% of overall aluminum. Feb increased to 46%. And the data that has come in on 31st of March shows that 53% of aluminum, which is on LME warehouses, comes in from Russia. That's about aluminum, but look at the other metals as well, and you will see a similar picture here as well. So 49% of copper on LME warehouses is from Russia, and 21% of that comes in from nickel as well. So the markets are looking at enough and more supplies right now, and the demand still fragile. And all eyes on the US inflation data that comes in today. And of course, it is going to be about China stimulus measures, which the street is awaiting.
Thanks a lot to Manisha for that. But let's get back to tracking the individual stock moves. A big mover this morning is Sula Vineyards on the back of lots of wine being consumed. Surbhi is here to give us the latest on that. Surbhi, over to you.
Sula Vineyards is surging in trade today, and that is because they've released their Q4 sales numbers. And for a seasonally weak quarter, the sales numbers are pretty strong. Their own brand sales has seen a sales growth of 15% in Q4 and a 26% growth on a year-on-year basis for FY23. Their wine tourism business has seen a growth of 18% in Q4 and 30% for FY23. With this, in FY23, they have reported the highest ever annual sales. The own brand sales is a little short of 500 crores, and the wine tourism revenue has clocked in at 45 crores. The growth in revenue is largely driven by premiumization. The elite and the premium brand sales contributed to 52% of their total sales versus 46% in the pre-pandemic times. And the company also expects the wine tourism to be 100 crores for FY24.
Okay, and what about sugar stocks? You're also tracking that entire space, Surbhi?
Sugar stocks are in focus today. All the sugar stocks are surging in trade, and that is because sugar prices in India have risen by approximately 7% in the past 3 weeks. And there are indications that they will continue to increase. Now, this price surge is driven by a combination of factors, including lower inventories and stronger demand. One of the primary reasons for the increase in the sugar prices is the fall in production. Additionally, the peak summer season has added to the increased demand for sugar, driving prices even higher. Another factor contributing to the price rise is the recent trend of ethanol production. Now, with a rise in ethanol production, sugar supply is being diverted to ethanol production, driving the prices even higher.
Okay, thanks a lot for that, Surbhi. Appreciate all of those stocks that are buzzing and the reasons behind it. Let's slip into a quick break. On the other side of the break, it's our special segment. It's the economy. Ramesh Chand, who's the member at Niti Aayog, and Siraj Hussain, the former agricultural secretary, will join in to talk about the IMD forecast of a normal monsoon and its impact on the production of crops. Stay tuned.